Hey guys, what's up? This is Akanksha and welcome back to my YouTube channel. When it comes to investment, then so many people are not aware of the variety of options they have to choose from. They either keep their money in bank or as FDs. But apart from these options, there are few of the amazing options like mutual funds, index funds and ETFs that are available in the market that you can choose to invest in. So in this video, I'm going to talk about what is mutual fund and how it works. So make sure you watch this video till the end, and if you find this video helpful, then please give it a big thumbs up and also subscribe to my YouTube channel. So in today's video, I am going to talk about what is mutual fund, how can you trade in mutual funds cost and fees, mutual fund investment strategy, and the types of mutual funds available in the market. So let's start with what is mutual fund. A mutual fund scheme is a type of financial instrument which is made by the pool of money collected from many investors. Mutual fund companies allocate the fund in different securities like company shares, bonds, debts, and other assets. The income or gain generated from these investments is then distributed among the investors. This helps the investors to grow their wealth through their investment. The next topic is how can you trade in mutual fund. Unlike stocks and ETFs, mutual funds are traded in a slightly different manner. Most mutual fund SIPs start at a minimum of Rs 500 per month in India. Also, mutual funds are traded only once in a day, that too after the market is closed. But on the other hand, ETFs and stocks can be traded at any point of the day. I will cover ETFs in my upcoming videos, so make sure you subscribe to my channel and stay tuned. Now, the pricing offered to investors for mutual funds is determined based on a factor called NAV or net asset value. So what is net asset value? Net asset value or NAV is the market value of all securities held by the mutual fund scheme. The NAV is calculated once the market is closed. You can calculate the NAV per unit of mutual fund by dividing the market value of the securities of the mutual fund scheme, that is total asset value minus liabilities, by the total number of units of the mutual fund scheme. The next topic is mutual fund costs and fees. Mutual funds are professionally managed investment instruments. That means they are managed by the professionals who are expert in managing funds, investing and redeeming shares according to the market sentiments, so that you can make better profit. Also, they come with an associated fee. This fee is called expense ratio, which has a huge effect on your overall portfolio. Since you are the one who is paying this fee, you must be very careful of this number and try to invest in funds that comes with zero or minimal expense ratio. Another type of fee is the load levied by some fund houses. This is charged when you are investing or redeeming your funds. These loads are also known as entry load or exit load. The exit load is generally levied when you are redeeming your funds before the maturity period. Now let's discuss the investment strategy. The mutual funds are available in two types of investment strategies, growth option and dividend option. In the growth option, you can reinvest the earned interest back into the principal amount and stay put with your investment. In the dividend option, you can take out the earned interest from your mutual fund investment and continue with the original principal amount. Before investing in mutual funds, make sure you go through all these essentials of investing and select the most appropriate fund as per your investment type and goals. In my opinion, if you are investing in long-term goal, then you must opt for growth option to build up your wealth. Next topic is the types of mutual funds available in the market. Mutual funds in India are broadly classified into different categories like equity scheme, debt scheme, hybrid scheme, solution-oriented scheme, depending on their asset allocation and equity exposure. Let's start with the equity funds. A mutual fund is categorized under equity fund if it invests at least 65% of its portfolio in equity instruments. Equity funds offer the highest returns among all classes of mutual fund. The returns provided by them depend on the market movements. They are again categorized into different categories. First is multi-cap funds. Multi-cap funds invest in equity and equity-linked instruments of companies across all market capitalization like mid-cap, small-cap and large-cap. The fund manager would change the asset allocation depending on the market condition to give you maximum returns and reduce the risk levels. The next option is sectoral funds. Sectoral funds invest principally in equity instruments of companies in a particular sector like FMCG or IT, etc. If you can catch the right cycle based on your research and analysis, then you have the chances of earning exceptional returns by investing in sectoral funds. Next is index fund. Index funds are the type of equity funds which tracks and emulates the performance of a particular stock market index like S&P, Nasdaq, BSE Sensex and NSE Nifty 50. The asset allocation of an index fund would be similar as that of its underlying index. Also, the return offered by the index mutual fund would be similar to that of its underlying index. I will cover this topic in detail in my next video, so make sure you subscribe to my channel and stay tuned. Next option is ELSS or Equity Linked Savings Scheme. It is the only kind of mutual fund that is covered under the Section 80C of the Income Tax Act 1961. Investors can claim tax deduction of up to 1.5 lakhs per year by investing in ELSS. Another category of mutual funds are debt mutual funds. Debt mutual funds invest mostly in debt, money markets, and other fixed income instruments such as treasury bills, government bonds, certificate of deposits, and other high-rated securities. A mutual fund is considered a debt fund if it invests a minimum of 65% of its portfolio in debt securities. Debt funds are ideal for investors who want to take lower risk. The returns provided by debt funds are very much predictable because the performance of debt fund is not influenced much by the market fluctuations. I have made few detailed video on debt mutual funds. I'll put the link in the description box below so you can check that out. The next category of mutual fund is balanced or hybrid mutual funds. Hybrid mutual funds invest across both equity and debt instruments. The main objective of hybrid funds is to balance the risk and reward ratio by diversifying the portfolio. The fund manager would modify the asset allocation of the fund depending on the market conditions to benefit the investors and reduce the risk level. Investing in hybrid funds is an excellent way of diversifying your portfolio as you would gain exposure to both equity and debt instruments. Another category of mutual fund is solution-oriented schemes. Retirement fund and children fund comes under these kind of scheme. A retirement solution-oriented scheme has a lock-in period of 5 years or till the retirement age, whichever is earlier. But in the case of children fund, they have the lock-in period of at least 5 years or till the child attains the age of majority, whichever is earlier. So these were the types of mutual funds available in the market. Mutual funds provide fund plans that helps investor meet all their financial goals, be it short-term or long-term. There are mutual fund schemes that suits every individual risk profile, investment horizon, and style of investment. So you have to assess your profile and risk-taking abilities carefully so that you can pick the most suitable fund plan. So that was my video, guys. I tried to make a little package of mutual fund and I really hope you find this helpful. And if you do, then please give it a big thumbs up. In my next video, I am going to talk about the advantages and disadvantages of mutual fund and what are the things to keep in mind before investing in any mutual fund. So make sure you subscribe to my channel and stay tuned. And I'll see you guys in my next video. Until then, stay safe. Bye-bye.